All right, so we're getting ready for a big week here ahead of holidays. I think, honestly, everybody is tuned in this week, and it's going to determine whether they stick around for the remainder of the year or do much on the remainder of the year through the holidays. Okay. And just to keep myself on point here, I did a couple things. This is the way we're going to start off tonight's webinar because, again, it's opened up to the public as well as members. So I kind of need something to keep me in line because, with members, a lot of you are, we catch up on from last week and we can bounce around a little bit. And most people can stay along. You know what I mean? I don't want to lose people here. So I got a little format I wanted to do initially, and then we can talk about, just talk shop. We'll talk about markets. We'll talk about names and setups and everything else. Hey, what happened? I posted this. Where'd it go? Did I post it? Oh, here it is, right in front of my face. Okay. So you can see it here. I got a little outline indicator and setup outline. And just to catch everybody up to date, because we didn't have a webinar midweek. So kind of tie everything together from last week to start the webinar. All right. If you guys remember the last time we were discussing how we kind of were in no man's land, especially at the index level, the market as a whole, okay? Meaning, no man's land meaning that a lot of this rally, we've rallied off the lows in a pretty decent way, right? And from this point here, the high probability turnout was going to be some sort of digestion at the least, okay? If things remain bullish, and we'll get to that in a second in regards to the backdrop, financial conditions, etc. Even with that, we probably get more of a choppy type price action, a digestion of these gains into a huge week like this week, a much anticipated week like this week, right? And that's kind of what we got for the most part, right? At times more bearish than bullish. If you go underneath the hood, individual names, it was on a case-by-case basis, right? Energy got beat up a bit. There were some other names that actually bucked the trend, did well. So it's kind of mixed, maybe a little slight bearish lean, but more importantly, we were looking for some sort of digestion as we were in no man's land. And being that we were at the upper end of this range, the risk reward was quite poor. So that's what we were looking for. We didn't want to stick our necks out in any way, being so, and that's what we got. So that's a plus, okay? Underneath, in the backdrop, I should say, the reason why it would be more choppy than just a quick sell-off for, the last couple of weeks is because financial conditions and the liquidity situation out there has been bullish, okay? There's no other way to slice it. Alongside with this rally, a lot of people are going to say, would say that more than not the catalyst for this rally was the Fed taking their foot off the brake, right? Where financial conditions down here were too tight. Again, you hear the rhetoric, the chatter of something getting ready to break. It feels like the bottom's going to fall out, the wheels are going to fall off, right? Start to fall off. And then all of a sudden, miraculously, the liquidity and financial conditions situation improves and you get a relief rally, okay? And that's still the case, okay? We'll look at that just to give you guys an idea quickly. For those of you who maybe have no idea what I'm talking about, this is kind of what it looks like and has looked like over the course of this downtrend, right? And this is what, if you've been coming to the webinar, right, on a weekly basis, or you're a member, this is nothing new. We've been talking about this continuously, right? You get, boom, sharp selling, downdraft, that offsides positioning. Everybody feels like, oh boy, here's the big one coming. And then relief rally. And what I want you to look at here is not just the S&P in the dark blue, but again, liquidity in what moves markets, right? And that's in the light blue. And you can see every time we get to a point where they feel like they're overdoing it on the tight side in regards to liquidity and financial conditions, you get a little relief, and that allows for risk assets to breathe, hence a little rally, right? Same thing here. And you can see with the red, well, those are orange and green arrows right here, right? Same thing. Put the calls elevated, everybody short, you name it, the whole enchilada. And then you can see the light blue, little relief, and you get the squeeze. Same here, light blue, little relief. And if you remember, we were kind of, again, if you were around, if you were attending the webinars or remember, if you remember, we were kind of anticipating it, or we were trying to be early in anticipation of it, right? Even if we weren't going to stick our necks out in any major way and put on a trade, betting on that outcome per se, we wanted to kind of anticipate it so we wouldn't get caught blindsided, right? If we saw that relief rally happening, we would know the reason why. It wouldn't come as a shock to us, right? And to be honest, like, I don't know about you guys, and maybe not a lot of people would admit it, but the first couple of times in this downtrend, it did come as kind of a surprise to me. I mean, as a matter of fact, this one, if you guys remember, was a big surprise to me. I did not expect or anticipate liquidity and financial conditions to ease so drastically and end up assisting a pretty strong bear market rally at that, right? So we kind of were anticipating this happening. If you can remember, we were talking about how even QT sort of calms down into year end, right? And just, again, the liquidity and financial condition backdrop would ease a bit, allowing for at least a bullish phase, if not a significant bear market rally, right? So we got that. And as of right now, okay, going into this week, that hasn't changed, okay? And a lot of people, not to get off the topic here, but a lot of people are thinking that's the risk going into this Fed meeting, is that Powell didn't do a good job, whether he wanted to or not. That's a whole other question we'll discuss. But Powell, the last speech he had, didn't do a great job in getting those financial conditions to tighten again, right? He usually, when they ease, he usually sounds a little bit more hawkish than usual. And he gets risk assets to sell. He gets, he talks the markets down. He didn't get that this go around, okay? And going into, again, a major Fed meeting, every single one of these are major. What the Fed is going to do is not any surprise. We all know they're going 50. That's a lock. There's no question about it. It's in regards to, and it's going to come down to the press conference after the decision. So just a reminder to everybody, because we all forget, the initial reaction off the Fed decision is meaningless, means nothing. Okay, it's all going to come down to the press conference. When words start to spit out of Powell's mouth, that's where everyone's going to be hooked on each and every word that comes out, looking for either a dovish tilt, a hawkish tilt, or even more importantly, and I think this is what came out of the last speech, not as hawkish as anticipated. Okay, so I think a lot of people going into this Fed decision and press conference are expecting Powell to undo some of this, okay? Undo the financial conditions, the easing that's gone on, and everything that's helped push risk assets higher over the last few weeks, okay? That's the anticipation, right? We could all have our opinion, okay? I mean, me, myself, I think the logical takeaway would be to expect Powell to kind of, even though he's looking at pausing the rate hikes per se, right? He wants to make that known to everybody out there, but put a little hawkish tilt on it that rates are going to remain high for a lengthy period of time. And more importantly, I think what he's going to want to do is drive the thought of rate cuts next year out of people's minds. Okay, that's I think the logical expectation coming out of this Fed meeting. Okay, now again, does that happen? That's a whole other story. Okay, and if it doesn't happen, I think it opens up a different can of worms. Not necessarily risk on runaway rally per se. Okay, but I think more of the same in a sense. And we'll talk a little bit about that. We'll talk about more about that because I think it's important anyhow as the webinar goes on. Okay. So that's what's cooking going into this week, and why this week is so crucial, even though we know exactly what the Fed is going to do action-wise, is what they say to move liquidity and financial conditions. That's what's going to be important to keep an eye on going out. Okay. The sweeper activity has been actually accommodative for the environment. Okay. And what I mean by that is it continues to be sloppy. In my opinion, the put sweeper activity, in my opinion, is better looking than a lot of the call buying out there. I still think the put buyers are showing more conviction than the call buyers out there. Okay. But if we are in an environment, right, and that's what we've been in, whether it remains that way coming out of the Fed is a different story. But if we are in an environment where we feel the index level, the risk reward there is poor, right, and we feel we're going to get more of a range bound, choppy type environment, we don't necessarily need the sweeper activity to be as bullish as we would normally look for, right? And what we've been seeing is more of stock picking, I should say extremely selective stock picking under the hood, right? So we see a lot of put buying out there in the crowded mega cap tech names. It's been nonstop. Even, the major indexes, the flow has been sloppy. There really has been no edge out of the flow in the major indexes and some of the more active names out there. Okay. But as far as names that the average player out there is not looking at, not paying attention to, and for shit sure doesn't own, okay, that's where the edge has been out of the sweeper activity of more recent. Okay, it's extremely limited, like I said, because it's been very selective, and it's been in some of the more defensive areas of the market, right? And no coincidence, those are the areas that have done well, even though the market and a lot of the crowded names, have been a shit show. Can't get out of their own way, right? We've talked about like some of the mega cap medical names. You even had recently some of the China issues, the casinos, biotech. So a lot of the more defensive, and the best way to put it, the less crowded areas, the areas that people aren't staring at all day long because they're holding bags in, there has been opportunity there. Okay. And if you guys remember, we've been talking about that now for actually months, right? Where the next stage out of this bear market is likely to be just that. Okay. Not going to be rewarding to people who are trying to pick a bottom or looking for that cascade sell-off at the index level. Not for people who think they can keep buying an Apple and Amazon on the way down and be rewarded, but for people who do the work and look for opportunities in names that have been neglected for decades in some areas. Okay. And because when you initially get into a bear market like we have, okay, you get high correlation, meaning this part of the bear market, right? Everything goes up and down with the major indices. Okay. You get a big down day, everything shits the bed, right? You get a squeeze, a bear market rally, most names will rally. Okay. So the only way to make money again, we're talking about now individual names, is to get help from the major indexes, okay, or get hurt from the major indexes. And what started to change more recently is, if you've been paying attention, a lot of the names have been diverging from what the indexes are doing, right? The market could be down, and the list keeps growing of names that are green on a day, right? Or you pull up a chart of, again, some of them are defensive, and that makes sense based off, the macro backdrop right now. But like, you look at a chart of Merck, and it's the total opposite of what, a crowded growth name like a Zoom or a Twilio or any of those others look like, right? So you're seeing a lot more than that. You're seeing a lot more of this. And I think that continues. And again, that's what I think we're going to spend more time throughout most time of this webinar about, because I think it's the most important. You guys know that. I sound like a broken record regarding it, but I think it's worth to continue to remind ourselves, because I think that's where the money's at. That's where the opportunities are at. And I think that increases with length in time in this bear market, okay? And as far as the FANG names, the mega cap tech names, the indexes, the growth names, the way I think they should be looked at, and this is my opinion anyway, but are more of rentals, okay? And for me, like, even looking at them as a rental instead of owning, right? So in other words, you want to rent an Amazon or an Apple or an SPX trade rather than own it. You want to be as extremely tactical as possible, right? So ideally, you would like to, if you can, stick with it solely on an intraday basis if you're trading those names, okay? And the reason why is, again, risk reward wise, it's just not worth it. And I see it all around me. I'll give you an example, okay? People are going to keep trading these names and playing these names and buying these names until, a number of them go belly up, okay? But, an Apple's not going to go belly up, or Google's not going to go belly up, but they're going to still play these names because that's where the action's been for, again, forever, okay? The problem is what I see is even the players who are playing these names and cashing tickets, okay? So let's say they buy an Apple or a Tesla, right? And they hold a call position overnight, okay? They're locking in profits. And let's say they buy a $4 call, right? Weeklies or front months, whatever. They're locking 80 cents on the upside, right? And they're thinking profitable trade, right? And they keep going back to the well. The problem is, with so much selling in these names, right? Your upside is that, and your downside, if you walk into a day where futures get hit off some news or somebody warns in the group or whatever it may be, there's so many risks in these names now, right? So many balls in the air. Your downside in those calls are zero. So what I see a lot of people do is they're being tactical on the upside, right? They're doing the right thing and taking profits because they know that profits disappear in these names quickly. But the problem is they're not looking at it on a risk reward basis, right? So they're locking in 80 cents on a $5 premium on a call, but the one loser may go to zero. You understand? And now they need 6 winners to wipe out that one loser. And that's the risk with holding these things overnight, is that there are more sellers than buyers in these names, right? It's obvious, okay? So that's why if you could stick with trading and playing these names on an intraday basis for the most part, in my opinion, that's the way to play these things right now in the bear market we're in, right? So you want to rent those type of names, and the ones you want to own are the names that we've been talking about, right? Now, again, you don't want to get sloppy and buy a name that's up 10 straight bucks in a straight line, right? But if you find an entry on a Merck or an ABBV or a Flex, right? Those type, or a Wendy's, those are the names that are possibly worth holding if you're looking for that further upside on a swing trade. Okay, why? Because the downside should be limited, where the upside is more rewarding, right? You can make an argument for the risk reward ratio on a lot of these names. So that's the difference. And you apply sweeper activity, like again, let's take a Wendy's or a Flex. And again, those of you who've been around the flow know what I'm talking about. When these names do come in, when the market sells, what do we see? Sweeper buying. You understand? Sweepers come in and they support these names into weakness, right? Which increases the odds that they hold up better than all the other crap out there that are seeing aggressive put sweepers into weakness. Okay, so that's the logic behind that rationale. Rent the crowded areas and own the less crowded areas that are catching the flow, right? If you do need to swing trade, if intraday is not suitable for you, right? If it's not, you don't have the time, you're not in front of the screen, whatever it may be, the only way I would hold overnight exposure in any of these names would be if you get that sentiment set up where positioning is offsides to an extreme, right? So example, these areas here, okay, in where the upside on the overall market may be rewarding enough to take a shot and hold overnight exposure. You understand? Your downside hasn't changed per se, but the upside, if you do cash a ticket, at least you're going to get paid, and it equates into more favorable risk reward, right? The one thing to keep in mind, you're in a bear market and you're likely to be early, right? So meaning that even if you're playing a Tesla or an Apple or a bet on the S&P 500 and you're buying here, in a bear market, more than not, you're going to be early, and the likelihood is you're not going to nail the bottom, even with all sides positioning, right? As we've seen, okay? But when that upside does come, even if you're early, again, you should be rewarded enough to where it's worth your while, if you need to hold any exposure at the index level or the crowded areas overnight, okay? Obviously, there's more risk in the individual names, because you could, let's say you buy a name like this, okay? Or there's probably even better examples than this, but you get a bear market rally and a strong one at that, and this does nothing. Or there's probably other examples I can show you that the stock has done absolutely nothing. I guess this one, yeah, okay. Right? So here, let's say you're buying in this area here, because of all side positioning as a whole in the market, you have to get out in 2 days, otherwise you're stuck, right? And if you're playing options, there's zero at this point. Okay, so that's the risk in these things. That's the risk in these things. Again, we're going to talk about that a little bit more, because I guess it could be confusing, especially me. I'm no educator, right? So I can't word it as I would like it to explain it. That's why I do it so often. So hopefully it adds a little more clarity to the mix. All right. So you stick with the cleaner action and the cleaner names and all the other stuff, especially and the way to think of a crowded, you don't even need to know the actual positioning and name to label it crowded. We all know what's crowded and what's not, right? All the names that people were piling into in the bull market are crowded, okay? Whether they've been shaken out or not, they're crowded, okay? Some have got hit harder than others, right? Maybe there's a bear market rally from that shakeout somewhere in the vicinity, okay? But it's still a crowded name. There's still a lot of eyeballs on that name. There's still a lot of bag holders in that name, whether you want to believe it or not, right? So that's my definition of crowded. What's not crowded are the names that are catching sweeper activity that a year ago you wouldn't buy if I put a gun to your head. Okay, you wouldn't buy a Flex right, in a raging bull market if I put a gun to your head. You wouldn't buy Wendy's, right, if I put a gun to your head. Okay, you wouldn't buy a Merc if I had a knife at your throat. You understand? So those are the names. Best way to put it is, because this is the way me and my buddies call it, the smoother trip. Okay, when the upside comes, if you're right, there's going to be a smoother trip in these names. Okay, the more crowded areas, the more the names that everybody owns and has been talking about, even when you're right, it's going to be like pulling teeth. You understand? You're going to get an up day, 2 down days, then an up day, then a big shakeout day, then bad news, another shakeout day. You understand? You're going to have to stomach a lot, even if you're right, to cash your ticket in a lot of these names. Where these names, when they get the momentum going, and God forbid you see sweeper activity heat up and continue to come in, you get these smooth trips when they get loose. Okay, so that's the logic behind it. You know, that's the method to the madness behind staying away from the crowded stuff and looking for more the cleaner action out there. All right, and the last topic, obviously, is a huge week this week. I think the more important thing for all of us, I know for myself, is not the setup going into this week. We all want to forecast the future. All right, we all want to predict. We think we have an idea what Powell's going to say, what he's going to do, and how the market's going to react. That's straight up rolling the dice, right? Period. I mean, if you don't see that and understand that, you got a lot of learning to do, okay? I think the more important thing to pay attention to is what I was hitting on earlier, how things shake out coming out of this Fed meeting and presser with the Fed and Powell, okay? And I think that's a good segue to look at some of the stuff that I was talking about initially, right? So there are a lot of things out there, okay? And again, not too necessarily a surprise to most, but that a lot of people feel need to be undone, okay? And if they're not, I think it's pretty significant and material for what may lie ahead going into early next year. All right, so let's talk about the setup going in, and then we'll talk about going out. Right now, on a short-term basis, okay, based off how last week the price action and everything played out, short-term sentiment leans more favorable than unfavorable right now. Okay, in simple English, if there is any weakness, okay, there's a higher probability for that snapback squeeze where a lot of these short-term and tactical indicators line up going into this week. Okay, so there was a lot of good, even though the markets didn't really do too much, there was a lot of good that came out of the noise in the price action last week. All right, our tactical sentiment indicator, excuse me, is not quite on bull signal, but it's right there, right? A down day, we likely get a bull signal there. Our intraday anti-VIX, which is kind of a VIX indicator, contrarian indicator, that had a sell signal, if you remember, going into last week, right? It was hanging out around the caution area up here, where the markets were up here, and now have crossed below neutral. Okay, so a nice rinse there, the anti-VIX. Again, just in simple language, more contrarian indicator on the VIX. The squeezometer, which a lot of you know, whether you're members or not, a measure of bulls percentage-wise, we're at 47% bulls, okay? If you remember down here, I think Lucci posted it midweek, or it might have been Matt, whoever's posting from the Lucci gang. We got down to under 40, which is noteworthy. Anytime we get under 40, it's really a bullish signal. We were at like 39% bulls right here into this pullback. All right, so we got a little bit of a bounce. Now we're more sitting around neutral right now, 47% bulls. Okay, and the equity put to call is actually elevated. Now I get it. Don't attack me. I agree with you guys. The put to call ratios are definitely not the put to call ratios of old. Okay, just like in the bull market off the COVID lows on the way up, we saw the lowest put to call readings we've seen in ages. We're likely in this bear market to see the highest readings we've seen, if not ever, in a long, long time in these put to calls. That on top of the weekly trading out there, it's ridiculous, right? So people buying puts in tomorrow's expiration, obviously, is not as meaningful as it used to be when it was weeklies weren't as active. Okay, but going along with everything else, I still think it's worth paying attention to. Okay, so in other words, if you got tactical sentiment on sell signal and you got an equity put to call flashing a bullish signal, right? I'm not going to say, oh yeah, listen, you got to play the equity put to call. But when everything starts to line up, I think it confirms the reading of sentiment out there. All right. So as a whole, again, I labeled it favorable, and in English, higher probability of a snapback squeeze off any additional weakness. Okay. On an intermediate term time frame, we're more neutralish, right? Kind of mixed readings, and that's what you get in bear markets that go on for a while on intermediate time frames. And the reason why it's neutral with a bullish lean, example, you got fear greed, which actually got quite hot during this rally. I think it got up there. I don't remember the exact numbers. Faded a little bit, but obviously nowhere near bull territory. Panic euphoria, the opposite, right? That's an indicator at a Citigroup. That's still quite favorable. Okay. The BOVA bull bear indicator, a lot of you guys know that, just got off bullish signal just recently. Was sitting in bull signal for months, I think, right? So that's more, call it neutral. Goldman clients, they've been doing some selling the last couple of weeks. Okay. So you got light exposure there. Okay. Surveys, AAII, NAAIM, all the survey sentiment out there, more towards the favorable side, off the best levels when the market was at its lows before the rally, but not too far away. And sector sentiment, which we pay attention to, was recently hot because of the rally. We'll look at it, has cooled off a bit. Okay. So again, neutral, slight bullish lean as a whole. This is the area a lot of us have been paying attention to most, big picture wise, in a bear market, right? This is actual positioning, not just sentiment surveys or readings out there. This is actual money being put to work and how they're positioned. Okay. And I think Goldman had a line that says it all right here. Okay. And I'll read it right off of this. Equity length continued to be short covered meaningfully last month, from more than 70 billion short in October and a record low of 120 billion short at the end of September to nearly flat now. Okay. So all that buildup of short and bearish positioning that went into that October low, right? That went into this on a chart. Okay. All that shorting that went into this and all that bearish positioning is now flat. Okay. And that's the best way to look at that positioning category as a whole. They're not bullish. They're not net long as a whole. Okay. But all that heavy duty bearish positioning that went into this downdraft, into this low, for the most part has been covered. And it's interesting, right kind of the high of that downtrend and everything else, right, going into a Fed meeting. It's crazy how it all lines up. But that's where they're at right now. So dead neutral. So there's no edge off offside positioning at all. All right. You got hedge fund equity exposure, dead flat. Okay. They are short futures hedge funds, but there's a lot more hedging going on there. But again, they're short futures, but equities, they're flat. We pay more attention to the equity side. CTAs, systematic funds, we've been talking more and more about them. They were significantly short as a whole. For the most part, they're flat, right? Some houses have them still net short in a slight fashion, but for the most part, they're flat. Sharpie riffraff, right? So that's commercial hedgers and speculators in the futures market, right? Index futures. You had the sharp players, the smart players out there. They were net long, and you had what we call the riffraff specs who were aggressively short, right? The speculative money is dead flat right now. I posted a chart. So you can see what it looks like right here. Okay, so here they were, again, into the lows, aggressively short index futures. And here they are now going into December Expo and the Fed week. Okay. Sharpies, the hedgers out there, the smarter money as we refer to them, they are still net long. Now, they're not as net long as much as they were when the speculative money was aggressively short, but they still are net long. Okay. How meaningful is that? I think it's worth noting. I don't think it's a signal in itself. But what I think it does for us is when if we do get a little downdraft and we see that sharp money start to get aggressively long into that, I think that would be the next signal from that positioning camp. All right. And I could go to that anyhow. Might as well, right? Why keep going back and forth? I'll go to that to show you where we're at there. What? Wait a second. Yeah, I guess this will do it. So the sharp hedgers, the sharpies as we call them, that's the red right here. Okay. So you can see here's the zero line here. It was actually into these lows where they started to get aggressively long, right? Draw that straight line. Oh, geez. That wasn't easy. And now they're over here. So they trimmed, right? The next signal would be you see whatever consolidation or a little bit of a pullback, and they go bink. If you're looking for a signal from them, okay. This line, green line or yellow line, this is these are hedge funds, large speculators, and these are the riffraff clowns. Okay, so that's where that stands going into, again, really no takeaway, right? Like, I guess that's the point I'm trying to make here. There's no real edge off any offsides positioning going in. What else we got here? And the last thing on here, and I think it's, you guys know how important I feel this stuff has been in this bear market. It's not always important, for shit sure. Once we get into a bull market, it's not going to be important at all. Okay. But financial conditions, credit default swaps, credit spreads, if you're not paying attention to where they're at, I think you're playing in the dark in this environment. All right, so let's look at that and see why that gave a green light for this bullish phase. And in my opinion, I think was a big part of this squeeze. Let me see. Do I have, instead of the search, I might have posted a new one here. Hold on. Bear with me. what I do? Hold on. Bear with me. Gotta go slow. Here we go. Okay. If you invert, again, it sounds like a broken record to most of you, but for anybody who's newish, okay, if you invert the CDX index and overlay it to the S&P 500, your draw will drop to the correlation. Okay, there's nothing more highly correlated than this. Okay, and here you see, because it's not inverted, you see the opposite, right? So you see every time credit default swaps, every time credit spreads widen out. Okay, so what that means is the probability of default increases. Okay, so every time you see them widen out, you will see it weigh on risk assets. Okay, you see things tight, credit spreads tighten up, right? This indicator come in, it opens the window for a bear market rally. Okay, you see here they tighten up, they widen out again, and here comes new lows. Okay, they top out and tighten up, and here's your little bear market rally. Okay, so a couple things that we've been talking about recently of note. One, this is where the Fed kind of got pissed off, if you remember, at risk assets. Kashkari threw a little tantrum. Powell wanted to kill somebody, right? Because the risk assets were rallying in their face, okay, off their rhetoric. The markets were ignoring them, basically. But this is where the Fed kind of threw their own little tantrum. Jackson Hole, right? If I'm not mistaken, was that Jackson Hole? I think it was Jackson Hole, right? Okay. So we just got to pretty close to that level, right? That 450 mark again, right? So it's something to pay attention to here, right? If the rhetoric starts to change, okay, and we start to see swaps continue to ease or even just stay tame per se, right? We don't see them go back to new highs, okay? That's telling us, that's signaling to us a different picture as far as the financial conditions backdrop is concerned. A lot different picture, okay? The risk of this bear market, right? The risk of every rally was that every time we rallied so much, you would have the Fed do their thing and credit spreads would widen out, credit default swaps, right, would push higher and weigh on any rally, okay? If that starts to change here, regardless of what the Fed may be telling us, okay, it's going to be signaling something else, okay? So I'll give you an example, like in what usually happens, okay, and the usual is when the Fed really pivots, okay? Not a pause, a pivot. You see credit default swaps do this, okay? Then come here, right? And then you see the Fed start to cut rates, and the bomb falls out. While the economy's falling apart at the seams, while the day-to-day news is suicidal and has you shitting your bloomers, okay, you'll see credit default swaps just roll over, okay, after peaking. And that almost is a signal as, in a sense, the smoke is clear, okay? Regardless of what's going on in the economy right now, because the Fed is pivoting, it doesn't matter, okay? So that's what usually happens coming out of corrections, more so than even bear markets, okay? Obviously, it's a different setup this go around, and where the Fed, because of inflation, again, our understanding is they may not be able to pivot, legitimately pivot, right? Time will tell, we'll see, okay? But I'll tell you one thing, if you see this start to do this, and all you do is paying attention to the perma bears on Twitter talking about the Fed can't pivot, you're going to miss out on a pretty powerful rally, if not the start of a new bull market. That's one of the first signals and confirmation of a new bull market. All right. So there, obviously, this is pretty noteworthy to keep an eye on, especially here for a number of reasons going into a big week like this week. And that's what I'm saying. Forget about where it is now. When Wednesday's over and the market's digesting what the Fed has said and dot plots and all the whole 9 yards, if this starts to do this, we got to get out of the effing way. You understand? We got to get out of the effing way. You don't buy dips into this. Okay? You move to the sidelines, you stay in cash until it tops out and opens up a window for a rally. Okay? But if it doesn't do that and it hangs around here or God forbid rolls over, that's a whole different story. Right? Then we can buy dips, right? Depending, right? If it hangs out here and just sits at the 450 mark without doing it, because in simple English, what this is telling us right now, okay, simple enough, right? If you're confused by this and whatever, this is new to you. I know most of you are aware of this, but for anybody who's new and scratching their head, what the hell is this thing? Like for me and a lot of people, this is telling us whether there's any warning signs as far as macro is concerned. Okay, if this is doing this, right, and we've talked about it, right, something could be on the verge of breaking, right? That's the risk in getting in the middle of that, right? What it's signaling is if the Fed doesn't take the foot off the brake, something, no pun intended, is going to break. All right, and what you're likely to see when you get that capitulation bottom, you're going to see, whoop, you're going to see that. You know what I mean? That's the capitulation lows, all the capitulation bottoms. You see credit spreads widen out. You like go look at 2008, your jaw will drop. You won't believe what it looks like. Okay, but that's usually the end. Why? Because the Fed has to pivot. You understand? So what this is telling us now is that no matter what we think, recession, early next year, mid next year, something's going to break, the Fed's too tight, real estate bubble bursting, this is telling us nothing is a concern right now. Nothing. Okay? Nothing. And that allows us to buy dips in individual names. That's the takeaway from that. Okay, when this goes like this, what you're likely to see is high correlation again with names, everything moving all together. All right, and the other one, oops, come on. Anybody have any questions on this? Just in case anybody's newish. Anybody have any questions on this before I go on, so I don't overload anybody? This is more of a zoomed in look so you could see even the day-to-day gyrations here. So you got kind of like a downtrend, right? Pretty clean, orderly downtrend in this, in where if you see these things, if you see it break out, it's something, again, to be, something of note. We are not there yet in regards to what, Praveen? You could, Brady, if you have a Bloomberg terminal, you could. If you know anywhere else, please share with me, because I've been trying to find something I can post in the room. Any other Any other intraday prices on CDX, if anybody knows? I think, as far as I know, I think Bloomberg Terminal is the only place. The Fed saying we are done. Listen, you got to understand something. Unless something breaks, Praveen, right? And you're aware of this. Unless something breaks, the Fed can't say they are done, even if they feel they're done. You understand? Because if they say they're done, you're going to have a risk-on rally that is going to destroy everything they have accomplished up till now. You understand? You had an orderly, very orderly, mechanical, risk-off environment that's doing, like, up to this point, exactly as planned for them. Okay, that's why you're hearing a lot of soft landing rhetoric. Okay, now again, whether that continues is a whole other story. But up to now, it's been going according to plan. Okay, the only time the Fed is going to come out and say we're pivoting and we're cutting rates is if something is broken. Otherwise, you're not going to hear that from them. Instead, what you're going to see it show up in this. Okay, so in other words, if Powell and the Fed is truly afraid that if they remain this tight, something is going to break, if they're really concerned, more concerned about over tightening than under tightening because of inflation, we're going to see it show up in this and financial conditions. Yes, yes. So Brady, again, we've seen periods like this before, right? Like, let me go back to the chart, but you're exactly right. The market is exactly calling their bluff. This is what the market's pricing in right now. And this is something else we need to look at coming out. Well, again, if you remember, you don't need to look at it because I'm going to bring it to your attention. But this is something else we're going to pay attention to. Again, forget about what Powell says about how the market prices rate cuts, right? So right now, the market is pricing in rate cuts here, okay? This is the market's prediction of the real Fed pivot, okay? See the minus? That's the market's prediction of a Fed pivot. Now, Brady, to your point, Powell and the Fed is saying, well, no. We're going to pause, but we're going to stay up here for a while, at least through 2023, right? That's what the Fed is telling us. We're not cutting in 2023. Remember, you heard Kashkari recently. There's no shot we're cutting in 2023. That's basically what Kashkari was saying. Okay, but the market is pricing in something completely different. The market's forecasting by springtime, by late spring next year, the economy is going to be a disaster. That's what the market's forecasting. And again, we're going to spend some time on that too. We talked about it recently. I think it's important to acknowledge that because I think, again, you have to trade around that right now, unless, like Ani says, you're just really tactical. Then you don't need to pay attention to it. But if you're swing trading positions, you have to be aware of this because this is what the market's telling you it's pricing in on a day-to-day basis. All right. So right now, with everybody, like even myself, right? I thought the economy was going to be, the wheels were going to start coming off already. Honestly. Okay. Summer, this recent summer, I thought by the end of this year, we would really start to see deterioration in the economy. Okay. And that we would possibly even start, not the Fed, but start to hear the market start to call for rate cuts. I was wrong, like a lot of others. Okay. Even the market was wrong. The market was forecasting rate cuts here initially. Okay. But then what happened was we got, if you guys remember, a hotter CPI, I think it was, hotter inflationary numbers. They were stickier, right? They didn't come in, they went up, right? And then what happened, the reason why the market got hit pretty hard is because the market had to reprice. They took their rate cuts from early first quarter next year and they moved them to here. And the market had another leg lower. Okay. So right now, if you guys remember what we've been saying the last few weeks, we're kind of in, again, it's nothing really sweet about it, but a sweet spot. Okay. The market's forecasting that the economy is not, not going to really start. The recession is not coming. The deterioration is not coming till late spring, right? Early summer of 2023. So we had, again, I'm talking about when we started talking about this, November, December, January, February, March. You had a good 6 months of kind of no man's land, right? And that's why you're hearing soft landing, where recession, there's no real recessionary signs out there, right? I mean, jobs are strong. You got some pockets like housing that are getting hit, but nothing recessionary. So you have this lull period here of a few multiple months where you have a Fed that's going to pause from increasing rates, but the economy not start to deteriorate till the summer of next year, and where the Fed real pivot comes. So now, like I presented this question to you a couple of weeks ago, right? How do you invest or trade into that environment, right? How do you get aggressive and buy in November, December, knowing that the worst is still to come? You can't invest, right? You can trade through that environment, right? You can buy some stuff in November and sell it into early next year, right? And that's what we're seeing. And that's what's behind this market rally of recent. You understand? When we get, like, if this stays the same, when we get closer to this time frame here, okay, the market's not going to rally into this. The market, at the least, is going to be extremely volatile, if not selling off aggressively into that, because the economy's falling apart. That's why you're going to get this. You don't get this because the economy's booming. You're getting that because the economy, again, the wheels are coming off. You understand? So that's what we're in right now, right? We're in now, again, we were talking October, now we're into December, right? So you got the rest of December, January, February, March, April, May, where you really don't see anything blow up. Now, again, this is what the market's pricing now, and it can change. And that's what we need to pay attention to, right? So either we see these things, the cuts push up earlier if the economy starts to deteriorate. So if you see the economy start to worsen, you're going to see the rate cuts move closer, okay? If the economy is more resilient, they're either going to stay the same or get pushed further out. But a lot of pretty smart people out there, don't think you get a true, real, again, forget bottom, the start of a new bull market without this in the rearview mirror. And the logic is, why would any institution get aggressive and buy with any conviction, knowing Havana, knowing this is still ahead of us? All right, so that's the logic. That's the logic. And again, all that stuff, the fund flows, all that stuff, right? That's where you see it. In this, you see it. All right, all that capitulation that we've been talking about throughout this bear market, there's been nothing to capitulate off of, right? There's nothing scary out there if you don't own Bitcoin. for these passive guys. Like, look at this. This is from both of the ETFs, right? Passive investors ETFs. You get one week of selling and that's it. Where's the did I post it on the chart? I think I did, right? Hold on. I never find this chart when I want it. I said, oh, I'm going to post it. I have it for the webinar. I can't find it. I can't take it anymore. But good questions anyway. Anybody have any questions regarding that? I know, listen, especially on these webinars when we're open to everyone, I don't want to bombard people with too much info, but those of you who know me know I wouldn't spend any time on it if I felt it wasn't worth it. Ask Praveen. Go ahead. This honestly, you have to ask questions. Okay, if you don't think I came into this game asking a ton of questions my first 5 to 10 years in this business, you're nuts. I still ask questions. What's your question, Praveen? By the way, while Praveen is typing his question, these are what we were looking at were credit default swaps. These are corporate bond yield spreads. So same rationale, but look at this. Okay. A few weeks ago, we saw a chart data shows once Fed pivot starts, market goes down. Yes, yes. Very true. If you remember, we were talking about that, Praveen, before those charts started to circulate, when everybody was talking about how they want a Fed pivot. They don't know what they're asking for. Okay. The reason why the market goes down usually into and through a Fed pivot is because shit is blowing up. The reason why you're getting a Fed pivot is because there are things breaking in the economy. You understand? But I saw a chart you posted where it shows the market going to go up after. Well, listen, it's not all the time. I give you an example where the Fed pivoted and the market went up late 2018. The Fed pivoted and the market went right up. But that was apples and oranges to what we're dealing with now. Okay. On a market point of view, that was a correction, and we are in a full-fledged cleansing of a bear market. Yeah, completely different. Completely different. Completely different. And you know what it is too? Honestly, Praveen, that I think the best way to look at it, and Ani hit the nail on the head. You can't, it's impossible to predict because you don't know where things stand. And to Ani's point, here's my point, okay? You know how you know when a Fed pivot is going to get the job done as far as risk on or equities are concerned? When nobody wants it, looking for it, or paying attention to it. You understand? If you get the Fed cutting rates and everybody thinks it's bullish and they want to get long equities because of it, that market's going to crash right in their face. Okay? You look at any time the Fed pivoted, right? And whenever that market turned off the Fed pivot, people were so scared of the macro backdrop and the price action of risk on assets that in 2008, the Fed came in and was buying shit and nobody even cared. You understand? So a real Fed pivot and bottom will come when nobody is even paying attention. The best example that we use, COVID. Exactly. COVID is the best example. Okay. When the Fed threw in the kitchen sink, implemented QE, cut rates, you name it. Forget about Fed pivot. Right? You're talking about an all-out fix, what the Fed did into the COVID lows. Okay. There was not one person, including us, who were looking at it in a contrarian way and wanted to be bullish. There was not one person who was bullish off of that, right? And the common line was, oh, no, no, no. This is a pandemic. This is not a financial situation here. The Fed can't QE its way out of a pandemic, right? So the Fed threw in the kitchen sink and nobody thought it would work. You understand? To Ani's point, that's more important to pay attention to than forecast 6 months ahead of time what the reaction is going to be. And I'll give you another example, right? The Fed, it cracks me up. The Fed, all right? The Fed is telling the market, you're wrong. We're not cutting rates in 2023. How the fuck does the Fed know if they're going to end up cutting rates in 2023, right? What happens if Bank of America freezes up? Or what happens if Home Depot has no liquidity? You know what I mean? Or what happens if the cruise lines and airlines need to be bailed out? How can the Fed say there's no way they're going to do something in 2023 when they know damn well what they're doing right now can cause a catastrophe and end up having to cut rates and implement the QE? Right? So listen, the people who are in the market a long time like myself, and we 100% we could be wrong, but our rationale is this. For the Fed to get through what they're looking to do here without something breaking is a miracle. Can it happen? Anything can happen, okay? But the Fed, to get through this tightening cycle, their mission, okay, to get inflation back down to 2%, right? And tighten, to continue tightening until that happens, without something breaking, is a miracle. That's what a lot of players would experience because we've been through this. That's how we feel. And to this point, everything's beautiful, but that's not the argument we're making. The longer you continue to do what you're doing right now, there are consequences. Guys, and listen, not to jump around, this is something else we've talked about, just, kind of what the chatter is out there. Like everybody's talking about soft landing, how earnings have held up, this has held up. We're seeing inflation run its course through the global economy, okay? We haven't even seen any sort of deflation, what the Fed is creating off what they're doing, run through the economy yet. You understand? Inflation doesn't have as negative impact on earnings and economically initially as deflation does. You know what I mean? The consumer's still alive. The consumer still spends. Bigger companies can pass through their cost, right? So things can hold up. So what the thing that people want to see is the impact of what the Fed is doing right now. When that starts to take its toll on the economy, then let's talk about it. You understand? When unemployment ticks higher and the consumer banged out all their credit cards and have no more money left, then let's have this conversation. It hasn't happened yet. You know what I mean? Yeah, Brady, I don't know if you're saying it in a joking way, you have a laughing emoji. That's a lot of reputable people are predicting that they're going to have to do that. Brady, to your comment, that they're going to have to raise that from 2%. That's their only way out. You're 100% right. You're 100% right. So again, that's just the thinking out there. But again, Ani hit the nail on the head. That's what is so difficult to predict 6 months from now, how this shakes out. Nobody can do it. The smartest minds out there, forget about people on Twitter pounding their chest. Nobody can predict how this all shakes out. Nobody. The only thing that we can do, the only control we have is to deal with what's in front of us now. And if that changes and we start to see some of those signals change, we need to change accordingly. That's a bear market, folks. There's no comfort. You can't get comfortable in a bear market. The only time you can get comfortable sitting in cash. That's it. All right? That's it. But when we do get into the periods like we're in right now, okay, where nothing's breaking, okay, there's the Fed is going on pause. You hear soft landing rhetoric. That opens up a door or a window for us to try to make some money in individual names. All right? That's the way we've been looking at it, and that's the way we're going to continue to look at it. Okay? And we're going to continue to do that until we get to an endpoint. Right? And that endpoint is likely to be the Fed cutting rates and all-out capitulation in risk assets, in equities. We're starting to see some fund flow outflow, by the way. That's why I was looking for the chart. I wanted to show you guys. We're starting to see a little bit. What did I do with it? How come I can't find it every time I want to? It's unbelievable. I think because I put an emoji and not typing is what I do. Or maybe it's just Twitter. Why is it showing me? It's not even showing me I put Steamroom, and it's not even showing me my stuff. Anyway, whatever. But you guys know the fund flow chart. That thing's up in the stratosphere, but starting to come in a little bit. Here's another look. Here's another liquidity chart here. This is more global central bank net liquidity. All right, but you see here, look. So nothing to, here's the bottom line, right? When you have all out liquidity drain, where you have those credit default swaps widening out, those are forces you can't compete with. You understand? You can't buy calls, okay, when this is doing this. You're going to get your ass handed to you. You understand? When this does this, okay, if you're buying dips, you'll be broke. You understand? So we're not looking, and those of you who are members know this by now, we're not, this word bottom is not even on our minds, right? We've tattooed that into our heads by now. You guys know that. We are not looking for the end. We are not looking for a bottom, okay? The signs that need to be there, they're not even close yet. They're not even close yet. So there's no reason to focus on that. What we want to do, okay, is during these periods here, we want to try to, oh, that's the wrong, no, that's SPF. We want to try to make some money in individual names, right? While this is in quiet mode, okay, we want to find some individual names to make money in. That's what we want to do. That's what we want to do. And the best opportunities, where they're going to come from, I'll give you guys an example, like post, right? This, and it's not going to play out the same way. It's impossible. Two planes went into the towers. You had a whole different, you had a whole different world then. But just to give an example of a bear market, right? This is the difference between a bear market and a correction. They're different. Right? The market did this. Again, this is, you've heard this before. I apologize for sounding repetitive, but the market did this during that bear market. If you bought tech stocks, if you bought the crowded names, if you bought high-flying internet stocks, if you bought any stock that everybody was counting and looking at during the bull market prior, you got buried or you chopped yourself up. Okay? You probably either broke or bored. Out of boredom, you left the game. All right? But I told you guys, in individual names under the hood, not the crowded names, names nobody was looking at in sectors that they would never look at. Okay. From this point on, you would have thought you were in a bull market. You would have thought you were in a bull market from that point on. All right. So that's why it doesn't pay to the market bottom. Look, the market didn't buy, it kept going and going and going lower, right? You got to see the things throwing at the market back then. Some of you know. I mean, here you got to hear, and you still had 9/11 after that. And then another new low after 9/11. I mean, you talk about treacherous. Yeah, yeah, I don't know. I'm not trying to spook anybody, right? I don't know if it's going to be as bad as this, as long as that, but it could certainly resemble it. And you got some smart people out there, right? Drunken Miller, one of them, who think it's likely to go that route. But the same thing, you heard Drunken Miller, the next sentence, what he said. The market was dead money. Some of the crowded names were dead money, but there were so many opportunities in individual names back then. And he thinks the same now. You know, he thinks the same now. Yeah, it's part of the game, Damien. You know, listen, we all know it got silly, it got stupid, right? We all know that. None of us don't acknowledge that. It's going to wear out. It's going to wear out a lot of people. And I'm telling you, what I think is ahead, honestly, and, you know, you got a big week here, so it's hard to make that statement this week because you think like a big move's coming. I think we still got a boredom phase to go through in this market. You understand? While everybody's so focused on the market hitting a bottom and the new bull market starting, or the wheels coming off and us crashing, right? That's basically all you're hearing from the average person out there. I think we had a phase that we still got to get through of neither of those two. You understand? That the market's going to bury both of those extremes. The player looking for complete disaster and a debacle out of the markets, and the person looking for the start of a new bull market. And you're going to see a lot of people leave the game just out of boredom. You know what I mean? That they can't make money on the long side, they can't make money on the short side, and they just look for something else, right? And then eventually they don't have the money to risk to even get excited about it. And it just, you know, through time. And they're going to be scarred for a long, long time before they come back. A long, long time. Let me see if I have that chart. I want to find that chart just so, where the hell was it though? Maybe, let me see. I think I might have put it in here. Hold on. No, here it is. Is this it? Oh, here's one of them. Here's one of them. This will get the job done for now. Beggars can't be choosers. I found one quick. Let me post it before I lose that. So this is the fund flows that we've been looking at. But I had one that goes further back. I know some of you were interested in seeing one that goes a little further back, but it didn't go that far back anyway. Damn it. Oh, I think I know where it is. Hold on. I got it. Hold on. So you see, right? Look. All right, so this is equities. All right. So again, there hasn't been, if I don't have the exact stats to back it up, but so I hear, and as I believe, there hasn't been the start of a new bull market without this washing out. You understand? Without capitulation from this. And I think HeartNet, if I remember correctly, I think HeartNet confirmed that for us to make me feel a little better about that statement. But I don't have the facts to back it up. You understand? That's the importance. That's that from HeartNet. It was HeartNet. Okay, good. Thank you, Praveen. All right. So that's not worth. It's not worth talking about the B word, or a new bull market. It's not worth it. But here's the chart I was looking at before. It was from Goldman. Here it is. On the bottom here. Oh. Is this it? Yeah. This is it. This I thought it goes further back. This is global anyway. This is not domestic. This is global, but very similar. But you like Europe, right? You had outflows there. So Europe helps this out. Domestically, it's been a lot worse. But this is what's going to happen after. Okay. And that's later on. This is going to be the fuel for the next bull market. That right there. This. Tony P. Yeah, Tony P's been singing the same tune, right? For quite a bit now. He hasn't changed the tune one bit. Our boy Tony P. Yeah, well, that's what you and I were talking about that recently, right? Like that would be the first place to probably look. And that's what people are doing. You're starting to see money start, like for example, January, we usually see money pouring in as far as fund flows. It's going to go to bonds. It's not going to go to equities, right? Usually you get that January effect. It's probably all going to go to bonds. Usually it all goes to equities. But you see this thing, like, look at this. This was post 2008 Fed pivot, COVID, right? You had negative fund flows. You had outflows, consistent outflows from the market all those years. That's why you got those V-shaped rallies off every pullback, right? Even COVID was a crash, right? That's an exogenous event. You can't predict that. And we ended up not only going to new highs, but going bananas off of it. This is the fuel for a new bull market. That's the wall of worry. Yeah. Well, this is where they basically gave people money, Brady, right? Physically. That's what caused the inflation. They mailed checks. They mailed checks. And believe it or not, still to this day, now they're starting to bang out their cards. They've finally gone through most of that money on the consumer I'm talking about. Oh, here's a little better look. Global fund flows. Oh, no, it's the same chart here, isn't it? Yeah, it's the same chart. But yeah, look, Brady, to your point, look at this. Hold on, PJ. I'll click on that 1 second. Let me I'll pull this up while I click on yours. Hold on. This is the consumer savings now. Hold on. It's over here somewhere. Oh, it's coming up. Hold on. Believe it or not, this way is quicker than here it is. Credit card balances. Look. They're banging them out. And you see this? Like this is what scares some people. Right? So physically giving people money, that caused this, right? Now look at this. Ryan with higher rates now, Brady. It's, again, nobody, we all can guess, but how it shakes out, nobody really knows. I don't see how this ends up being a soft landing. I just, what's the hell? What is it, a private account, PJ? Oh, it's Steamroom. What is what's I can't, how come it doesn't let me click on it? It's OnlyFans. Hold on. What can you take a screenshot, PJ? It doesn't let me open it on here. How come? What a pain in the ass. All right, so we'll talk some names now. Anybody have any PJ, if you can get me a different look or tell me what it is, I can dig it up. Anybody have any questions on anything we spoke about or anything that I didn't touch on that maybe you guys were looking for that we usually talk about each week before we start talking names? Yeah, top bets. I forgot to post it again, didn't I? I thought I did. Hold on. Let me post top bets. And let me do let me just go here then. Hold on. December 5th, is that Friday? No. Why? Look at this. Why does it do this? What's Elon Musk doing to me? Can somebody explain to me what is he doing to me? What's the date of Friday? December 8th? I paid $8. He's ripping me off. It's like a crypto scam, this Twitter he took over here. Is this it? This is not it. This is Thursday. Anyway, this is Thursday. And look, here's the action, right? So we're gonna get a mixture the 9th, right? Let me just get it off of this. Twitter search. I thought Twitter search, it can't get any worse than it was, and it's actually worse. How is that possible? That was the one thing I was hoping he would improve on taking over Twitter, Musk, and it got worse. Okay? And it got worse. Figure that out. All right, I'm just reposting it. I have it here. Okay. So this was Thursday, but just so you guys get an idea of the names, right? I'm not just going to put the non-crowded names that catch decent action on the top bet list. If a name like an NVIDIA, okay, catches a good-looking bet, I'm going to put it on the top bet list that night it catches it, okay? But again, you do what we're all big men and ladies, we could do our own, make our own decisions. But I'm not putting it on and as an exclusion to what I've been talking about, right? You understand what I'm saying regarding the crowded names? Not this is the top bet list. If the name, in my opinion, catches a good-looking order, I'm going to put it on the top bet list. All right. But what I was referring to early in the webinar and webinars prior, okay, these are the type of names that will see the smoother trip. These are the type of names, you want to see probably 5-6 orders of NVIDIA just for maybe a trade to confirm it based off all the action. Okay. You don't need to nearly see as much in these type of names. All right. So just so you get an idea. of why I'm putting these names on there. But these were all good looking bets. Workday, that was probably the sweep of the day. March 170s. Look, lays out nice wood. Really nice bet there. Workday. March 170s. This is Thursday. ISRG, you guys know Intuitive Surgical. I think that's been red hot too, right? I get these symbols confused sometimes. Oh, wait. Oh, that's not as hot. Yeah. HCA, that's another healthcare related name. See, a lot of these healthcare medical names have rallied. They need a little digestion, and they're starting to get it, especially the bigger names. Here's NVIDIA. Bill, this caught one nice bet too. But this is the group, the last group you want to start digging in. Again, you want to play one name, roll the dice, that's fine, but these are tough, right? We spoke about some of the other names. You got STNE that caught some decent action, April's, and there was some other software name, I forgot the name, but whatever. So they could catch decent action from time to time, but they're going to be tough. Even if they do. Shop, all right, that caught some decent action. Here's Fridays. L, this was the sweep of the day on Friday. L. Now they do everything from what I read here, Lowe's. You name it, they're in it. Profitable. What's the weekly? Let me see 1 second. Yeah. So no, this is not Lowe's. This is not Lowe's that you're thinking of. This is not Lowe's, the Home Depot type Lowe's. This Lowe's, they do insurance. Lulu for hotels. They have a hotel, Lulu was telling me. They do all sorts of things. Pizza, some of these food names, right, have been seeing flow and doing well. Even retail names like Dick's, right? Look how good this thing looks. China. These were a nice lotto, but EDU, look at this thing. What a debacle. Yeah, China's been definitely stole the show, but I mean, listen, can you say they stole the show? Look what happened to these things. They evaporated. You know what I mean? It's about time they put some sort of rally together, for Christ's sake. What's going to be interesting is there's going to be something where they sell them off, right? They're going to run up, they're going to take profit, and do they get bought into that pullback? You understand? Hockey sticks, they are. That's going to be the question. And if they do, that's a promising sign. You know what I mean? Because could be the start of that U-turn. Again, probably won't be easy, but you know what I mean? They could start the lower highs, higher lows, right? Higher lows? Yeah, higher lows of the right side of that chart. They evaporated, right? There's nothing left of these things. So there's been some big squeezes. So this TAL I like it as a lotto. I'm not going to lie to you. How about this? If there's some buying into a pullback, I'm going to take a shot with lottos. Lotto, like leapish lottos, not lotto weeklies. Lottos, I want to hit it big or let it go to zero, nothing in between. I mean, there's a little story behind this. I actually did well with this one back in the day when it came from nothing. But this is the China education, online education, this and EDU. Why, listen, you can't see China having a decent year 2023? I can see that, no? I don't know how easy it's going to be. Momo, yeah, remember that? That used to be a great stock, too. How about even this? I don't know if you guys remember this. Sil remembers this, probably. Remember this, Sil? IQ? These stocks were fire once upon a time. But, yeah, and listen, you guys know China, here's the thing. You know me, China, I've been bad-mouthing China for a while, China stocks. I'm not a big fan because of China, not because of the companies themselves. You know, you could be sitting in the clear, stock could be doing well, and China, the government could get their hand in the cookie jar. But for option trading, I think if they become in favor and they start buying dips, I think they're made for options, not for equities. I'd be careful buying equities. That's my opinion. I'd be careful buying equities. You know, we've seen, what was that one, that stock that went to zero that everybody was playing, and it was the most exciting stock on the board. Everybody was playing on a day-to-day basis and went to zero in one day, disappeared. Yeah, what was that? Luckin Coffee. That's it. I remember, and you guys probably remember me complaining, this, okay, Luckin Coffee made me take profits on this that I loved, Billy. This thing was catching the best flow you could possibly ask for, was strong as hell. They were buying every single dip, right? True story. And I got out of my position. If I'm not mistaken, it was here, right? Yeah, right here. Somewhere in here. Is that the year? When did Luckin Coffee go out? What was the year? Anybody remember the year at least? No, that was before COVID, wasn't it? You had Luckin Coffee, yeah, 2019. It was before COVID, exactly. Wow, even worse. So I sold somewhere in this vicinity here. Okay. I was so excited. I held it for like 6 months. Okay. I said to myself, I am not selling. I don't care what happens. I am not selling this thing. I'm going to get greedy. I'll let my profits play cushion. You know what I mean? If I give back all my profits, then I'll stop myself out. But I'm not taking profits. Then Luckin Coffee evaporated in a day. I said, let me get the hell out of this thing before I lose all my money. It scared the daylights out of me, and I end up selling this thing, and then this thing went parabolic. Look at this. Luckin Coffee. And there's been quite a few of them. You know? But yeah, listen, for options and for trading, China, some of these China spots may be in this year for buying dips. They may be a good place to play you off dips, all kidding aside. And not only that, look at some of the stuff that's been dragged down by China, right? Like this stuff. But, oh, me too, Said, me too. Don't get me wrong. I was the biggest China bear. You guys know. You don't need me to tell you. But again, I think based off the bear market we're in, believe it or not, I think you're going to have more opportunity. You might have a chance at more opportunities there than in U.S. tech. How about that? You know what I mean? I can make the argument I'd rather own this stuff than U.S. tech. Based off what we're seeing now, anyway. You know, the Fed cuts rates and all that. That's a different story. But, you know, you got a lot of damage has been done here. You know? So again, I'm making the argument that lows are possibly in and, you know, weakness is going to find buyers. That's the argument I'm making. Not that these things, you rally, V-shaped rally to new highs again. I just think dips can be bought instead of everything sold. Yeah, so I wouldn't be surprised we see more and more Asia related stuff. Here's the trick though, right? It gets a little dicey. Like, what about this? Okay, this is what like, what about a name like this, right? This is Asia, but it's also in the growth Kathy Crowder group. You know what I mean? So I think you got to make distinctions, right? You can't. Yeah, exactly. No, that's a good call, Brady. That's a good call. That's a good point, though. That's a great point. Yeah, I'm saying this. You can't. You can't get trapped into buying it. Well, this is dead, right? This is dead. This is dead. But that's why I think like casinos and some of the other stuff, hotels, right? They've been holding up. There's a lot of groups, So let me go through a few more names just for Presley to throw on there. Again, medical names, they're all over the place. We probably need a little breather in these things because they've been too hot. CELH. Look at this beast. Where's Lulu? You know this one, Lulu? I don't think they're profitable though, are they? No. This is biotech, I think. These biotechs have been on fire. On fire. This is what now? This is oh, this is not biotech. Oh, what is this? Energy drink? Oh, I don't even know this thing. Energy drink, and this stock is doing this. Man, oh, like Monster. Damn. Are you serious? See, I'm so out of the loop, Presley. I have no clue. Really, Sil? Damn, I've never even heard of it. Never even heard of it. So apparently that's another group that's been bucking the trend, huh? All right, so Presley, that's Fridays. And Thursdays we went over, right? Work day. Let me see. I got another day on here. Oh, yeah, here's another day. Oh, here's a biotech. Anybody know anything on this biotech here? Remember we saw this little weird. They were selling puts to PRTA. Oh, yeah, this gapped up there. You know this, Lulu? PRTA? Yeah, had some strange action. January, they were buying the 70 calls and selling puts, which was pretty bullish. What I found a little strange, it was so short term. Maybe there's a catalyst, right? That could be it. Like you got a lot of these UNH. How's this one been doing? Strong. Got a good trial results. Interesting. So what we should start to see, okay, is you're gonna start to see. Oh, here's a Sil favorite right here. He loves this stock. DG. Look at this bomb. June 280s. June 280s. HZMP. Remember the flow there? Oh yeah, we talked about it. A couple of people I know got sold it the day before. I don't mean to laugh. They sold it the day before. Oh, officially bought by Amgen? Wow. Yeah, so I mean, this is recession play. And this is a beast, DG. This is a beast. Look at this. This is a beast. So this is where all the opportunities are. Now, listen, the more commitment we see from sweeps, right? The higher the conviction of the play where we can buy dips. right? And it doesn't mean that the stock is going to be in favor for the next 2 years, but for that quarter or two, it's like exactly what was going on here, right? They were buying every single dip in this thing from that bull risk reversal, right? On every little dip. That's where the money's at. We don't want to chase highs into hot sentiment. You know what I mean? Ahead of a Fed meeting. We want to be smart. But when we get bullish sentiment signals, right? We have a watch list of names that have been seeing action that we can buy off a pullback. That's the difference. And what we should see more of is that list expand and more commitment from sweepers in those names. So the action we saw in BTU or in HZMP, we're going to see more names see that type of action where they come in, they buy, then there's a little dip, they come in again. You know what I mean? Stock rallies for a week, following week it dips, they come in again. And you can see more and more of these names. And I think all the noise is, again, in the mega cap, crowded NASDAQ names. That we could trade them, but we don't want to be distracted by them, you know? DG, they did everything, you know, they bought the dip, bought options. Yeah, exactly. And so that's the difference. They're making a bet on the name. You know what I mean? They're making a bet on the name. They probably have a position in the equity, and they're coming in and adding some exposure through calls. You know, they're not playing a rally off the Fed rhetoric or an upgrade or chatter. You know, they're making a bet on the company. Pfizer, you know, that's another stock. It has an analyst day on Monday, but this is another stock that, you know, dip should be bought in this thing. Dip should be bought. This thing's a beast, right? When it pulls back, you got to pay attention to the action. Oh, Merck is, forget it, Merck. I can't believe how much this moved, this Merck. I can't believe it. Like maybe I'll finally pull back here a little bit or sit around. That's a big move, you know? And even the names, that's where the opportunity is. And I didn't even realize that as it was happening. The names that they were buying are blooded. A couple of these names got hit and they were buying weakness, and look at them now. You know what I mean? Look at this. You blink. Look at where this stock is, NVO. The other one was NVS. This thing was getting killed, I remember, when they were buying it. Look at this. You guys remember these, right? They tattooed this NVS down here. Yeah, NVO was a killer run. Killer run. You know what name I'm surprised we haven't seen more of? Because the last time these things were in favor, this was one of their favorite sweepers. Bristol Myers. We haven't seen a lot of flow in this name yet. You know, but you know, they've all rallied significantly. They've all rallied significantly. So, you know, we don't want to be stupid chasing, that's all. I can't, you know, like names like this. See, this was tech, and even with the flow, I said, oh man, this is like a lot of chop here. But you see how with the flow it got out? I didn't think this thing was going to get out. I'll be honest with you. With tech out of favor and all, that's not easy to get out of. But regardless, we're going to see more. We're going to see more. We're going to see more names, and we should see more flow, period. But it's going to mix in with all the crap. You understand? We're going to have Tesla sweepers every 5 minutes. I mean, what are you going to do? You know, and the thing is, it's like, if you're trading, especially intraday, you don't want to necessarily totally ignore the ETF action and the mega cap tech and FANG action, you just you want to pay attention to it only more so at certain spots, you know. But the problem is, for me, I get distracted a lot of times. I get distracted when I'm paying attention to that crap. No, they don't. I mean, they don't. But sometimes for example, if you're coming off lows, right? When you're starting this bear market rally, and you see they hit Apple aggressively or Tesla, there's some money to be made intraday. You know what I mean? If you play options intraday or equity, but I'm saying even more so for options. So they're liquid, they move, and for intraday purposes, that's all. I told you, for overnight, I just wouldn't do it right now. I wouldn't do it. No, none of that. Any of the levered ETFs, any of it, nowhere near as no way. You know why? Because there's more crap. There's more hedging. There's buying in TQQQ, or when they're bearish to hedge. Like if we saw a TQQQ sweep, it only meant one thing: they were bullish the Qs. Now it's more so that they're bearish the Qs and they're hedging. You know what I mean? They use those things to hedge. DIA, I haven't even paid attention too much attention to the any of the ETF stuff. But DIA, TQQQ, they were money. Even these guys, remember the Soxel guys? They were money too. I think they got one trade right recently. Short dated trade. But it's you gotta get so lucky. You're relying on a lot of luck to pick out a batch of action that you think may be clean out of all that action. You know what I mean? Long, they were buying weekly calls, Brady, the last round. See, like, me, Sox will teach you guys. I used to pay attention to all that flow religiously. Now, honestly, I look at it and I don't even remember. I'm more involved now in trying to pick up early action, even if it's not actionable yet, early action that may be actionable, early. That's what I'm more in tune with here. Somebody was asking me, and I forgot to answer the question. I saw it and I was talking and about industrials. Who was asking me a question about industrials? I think in regards to flow in the industrials. I apologize. I saw your question and I was. The only thing we've seen industrial flow, there's been a little protection recently in a few names because they run so much. One of the names that didn't really rally much that we saw a bet in was this name. But again, it was just one bet, but a name maybe to keep an eye on, see if they come in and add to it. MMM. Yeah, cats. There was a little protection in, but look at this. These things just got too hot, man, Look at this move. So yeah, that's the animal, deer. Look at this. Bianca, you play MMM? Puts in calls or long and short? Yeah. So there was a decent call buyer not too long ago in MMM that I'm on the lookout to see if they come in and add. Let's see if I can pull it up here. You got to be kidding me. What's wrong with Twitter search? I don't mean to sound like a crybaby here, but what's the matter? What's up? Why is it doing this? Look at this. This is not it. This is long-term protection nonsense. There was a decent looking. I should pull up the Steam room, but I don't want to shut down the webinar. Yeah, I don't know what Musk is doing. He's so concerned with digging up dirty files that he can't fix the obvious needs here. For Christ's sake, people get so wrapped up in that shit, huh? The shadow banning, and you know what it is? It's all politics. Politics is the devil. It can ruin you. They get so wound up, these conservatives and liberals, right? To the point where they want to kill each other. Like, I listen, I understand if we're in an election year and a couple months before you're getting rolled up, they don't stop. Like, I remember after the election, I'm like, oh, maybe it'll calm down now. It doesn't stop. Like, Twitter became all political, right? It's horrible, man. Horrible. I just hate politics to begin with, you know? Yeah, that's what they do. Exactly. Both sides. You know, you get a Republican president, they kill them all day long, right? You get a Democrat president, the other side kills them all. No one's ever happy. Always complaining, right? And it's one extreme or the other. Yeah, all these conspiracy theories, both sides, they need their heads examined. They ruin their life with this shit. You know, I'm going to spend that much time and energy on fucking Biden and Trump. Can you imagine? I couldn't give a rat's ass if both got hit by a bus tomorrow at the same time. Simultaneously. Oh, good call, Praveen. I traded this. I had a nice trade out of this day trade. But this is a sexy stock. You don't find too many of these in the bear market. But this is a one to watch on dips too. You know, if there's any problem right now, it's that a lot of the flow we've seen, the names look like this. You know what I mean? That's the problem. And it's because, you know, we've just been through a pretty strong bear market rally. The next good setup in names, mark my word, right, is when we get high correlation with everything. So what's going to happen is you're going to get the market come in for whatever it is, days, weeks, where everything goes lower together. Some stuff will hold up better, but most of the shit's going to go down. And then they're going to start buying some stuff at some point in names. And that's going to be the spot where we're going to see a new batch of names come. Yeah. So we need to see, maybe we get it this week off the Fed. You know what I mean? You know, maybe the market comes in a bit if Powell's hawkish or whatever he does. You get some correlation where everything comes down, and then you're going to start to see sweepers pick at some names. That's what should happen. That's what should happen. ADMA, that's a little biotech, right? Yeah, look at this. Damn. Oh, you know, there was another biotech that caught action late last week. It caught one sweep, but it was a decent sweep. See, we've seen it around a couple times. No, wait. Yeah, CTIC. Praveen with his photographic memory. They must have FDA approval or something coming, right? Jan 6. Yeah, these are the more speculative biotechs. So yeah, you got to be careful. There's FDA approved. You know, these are. But like Sil was saying, when you see a profitable name catching real action, that's what you want to own. You know what I mean? That's what you want to own, especially if you got a decent spot. You know, names like this, DG, like still likes, like look at these numbers. These, look at this. So you take advantage of dips. That's what you need to do. Fed member bought bonds. Everyone jumped in on. What happened? Fed member bought bonds? Who? Which Fed member bought bonds? Recently? I didn't even hear these Fed members trade. You kidding me, Damien? This is like that round, the guys who resigned, the guy from Texas and the other guy who's still around. I see him on CNBC and Bloomberg. Yes, leaps. There's been some decent amount of leap buying out there. This is a retailer, right? Yeah, apparel retailer. Wow, this thing could have beaten 2024 leaps. Yep, let's keep an eye, Praveen. Let's see if they come back. You know what I mean? Let's see them come back on a name like this. This thing's getting hit hard. But there's some nice move on retail names. This name had a nice move over the last week. Dick's looks good too. But retail, I don't know, retail's tough, right? I mean, the consumer's okay now, but what going she going broke, no? But they got that sweet spot, like we were saying, to play through. Macy's. Man, that was rally off the lows. Yeah, I don't, I'm not the biggest fan of retail. I missed even scalping these things. I missed that whole rally in retail, some of these things. Yeah, I don't see, I think they're trying to squeeze in almost like a bear market rally in the in-between here before the economy shit hits the fan. I also represent, Lowenthal purchased over 50 million. What? When was this? 11/8, November 24th. And he purchased it on 11/8. Hysterical. Treasury bonds. That's hysterical. Huh. I don't know how these people are allowed to have money anywhere. It should be tied up, right? They can move once a year and that's it. Yet Fed members into the COVID lows, moving money out of bonds into equities as people are locked in their homes. Yeah, I don't understand. It doesn't make sense. What is it, Praveen? Which put the call chart? One I posted or just in general? Oh, Presley, here's a weekly sector sentiment. Go ahead, Praveen. What's your question? So you see some of the hotter groups cooled off a little bit. Energy, look at that washout. Financials. Healthcare is still up there. So cooled a bit, but nothing. Look, industrials cooled. No real setup going into this week anywhere. I'm hearing about interest rate arbitrage contributing to elevated liquidity. It could be. There's not even in regards to interest rate arbitrage, but that's definitely could be playing a factor. I've heard many people talk about that. There's even these other trades, what do they call reverse conversion trades that are playing a factor. It's not the same that the same put the call we're used to. I think again it can be used in addition to everything else we're looking at. But by itself, it gets tricky, you know, it gets tricky. Like I wouldn't be surprised we see levels we never thought we would see on the put to call in this bear market before it's all said and done. You know, I just think that, just look at the action we see on a day-to-day basis, Praveen. You know what I mean? You see the action there? It's ridiculous. The weekly action. It's insane. So you can see how, you know, it could get to extremes regularly based off that action. You know, one day you could have crazy put action in weeklies, and 2 days later you could have crazy call action in weeklies. You know, you're talking about a whole different type of flow post-COVID, whole different type of order flow. A lot messier. Yeah, it's too many, you know what it is, Damien? Too many option players, too many people got into the option market. It used to be that the option market was solely used more so for hedging purposes and a little speculation. You know what I mean? Then, you know, people, funds would use it for leverage purposes, right? They'd build positions in equities and either hedge them or add a little juice via calls through the option market. Now it's you know, more popular than equities. You know what I mean? They're more rentals than actual bets. And I'll give you an example. Like, let's say you got the Fed this week, right? 2 days, you know, the Fed's on a Wednesday. You know, that Tuesday, Wednesday, you can see weeklies, you know, so lopsided. So I think it's still a reading of sentiment when you get to extremes, but I don't think, you know, it's not as efficient of a signal on it by itself. Because if you like look at like the put the call readings recently, they've, especially on down days, anytime you got a spike, it was a pretty decent signal that you were near some sort of snapback reversal. You know, sometimes you see these put the call spikes out of nowhere. Yeah, it's not confusion, definitely. But Lulu, it's like, I'll give you an example, right? Let's say you own equities and you have a week like this week with the Fed, right? You don't want to trim your equity positions. You could so easily now with weeklies, you could just hedge a lot of your risk that way, right? And you got pair trading. That's a whole other factor too. You got a lot of new things that, with, you know, the option market, they never existed. Yeah. Yeah. So, and wait, we're gonna have, before you know it, everyday expiration. Get ready. Get ready. But you know, they're still, no matter what, they're still getting, it gets messier, but you could still, you got to look more, you got to harder work, but you can still find isolated, you know, you can still find the edge that we're used to. It just, you got to dig through a lot of there's so much noise. It's hard to cut out the noise. It's impossible. You know, how do you cut out the noise? SPX? I don't even, I follow it just off, I don't even look at daily SPX flow. You watch it daily? Yeah, I don't even, you know, through trading, you know what it is so much of it's tied action, you know, and spread action. Like that's, I look at the spread trades more than, yeah, but the 10 million, those are tied trades, no? Where are you seeing them? Oh, 10-minute. I thought you meant 10 million. A lot of the SPX action, Damien, is not clean, you know. VIX too. Same thing with VIX. But you know, so what did I do? I took the equity, put the call. But like you're saying, if you sit around and you have the discipline to wait around, to wait for that cleaner action when it comes, when you can see it, there's still an edge there, no doubt. You know, there's still an edge. It got a lot messier. What I'm hoping is this bear market cleansing cleans a lot of it out before it's all said and done. I know it looks far-fetched to think about that now, but we still have a lot of work to do. Because you probably know, Damien, that before COVID, you would see, if you ever saw an $800,000 opening sweep in Tesla, you would jump out of your chair. You know what I mean? It was so actionable. You would never see that. Like if I saw a clean opening Tesla sweep for 800 grand, $1 million, no doubt I'd be all over it. Now it means nothing now, like we were saying, you see that right off the open, you see that. And then you see the even bigger put buyer right after that. Yeah, that's what it means. You hit the nail on the head. It's a signal in itself that the name is toasted, right? It's so true. Exactly. Just like exactly became SPY. Exactly. But Praveen I couldn't say it any better. Hit the nail on the head. That's when you know it's just too crowded, Mark. It's just too crowded. There's too much speculation and hedging going on in that name. Yeah, who's selling exactly? We're not, right? We're talking about just buyers. What about all the premium sellers there? So that's why. And I'm not just saying it. The flow is just. I think the flow is showing a bigger picture of what's going on in those names. I'm talking about even for people who don't follow flow, it's telling you the trades in those names are extremely difficult right now. You understand? They're really difficult. And a lot of those names are going to calm down. I promise you. Micron, once upon a time, was, caught tons of action. Then it went through like 2 years of seeing no action. It happens. They go out of favor and you forget they even exist. So I think it's going to happen again with all those names. Apple, we're going to see a lot less flow in these names before this bear market is done. Oh, how much? Like every day, right? That's when like Uber. Like what the hell's Uber to catch that much flow? Every day there's flow in Uber. Every day, right? Like if you pull up open interest in any of these names and you look at the positions, and you're trying to get an edge or daily flow or anything in these names, you know what I mean? Who's rolling? Who's hedging? Who's selling premium? Who's spreading off calls? Forget it. It's a menagerie. These, we just post-COVID with retail coming into the picture and the expansion of the option market. It just, with the Fed doing what they did, it was one big tornado of debacle. Yeah. These names are tough, Bianca, These names are tough. They're tough. Like I get the allure. We all want to find the names that are going to survive and potentially maybe be a part of the leadership of a new bull market. I think it's just too early. It's too early. Too early. Raj, listen, this is the name that's catching the best action of the airlines. I just got a bad taste in my mouth, airlines. But if you put a gun to my head out of the major airlines, this would be the name I would buy. You know, but again, they're just tough. I almost like the cruise lines better, and they're tough. You know, yeah, caught some Jan action, UAL. But yeah, these are just tough. They're tough. Yep. It's a lot of, again, the underbelly, and not even the underbelly like under the radar type names, just names that aren't as active, gonna stick out more. Like you see a name like this, right? Okay. And again, usually it's just one order, you say you caught a nice bet, and that's it. One order is nothing special in anything. Okay. But just one order, okay, they just they got all of open interest. You understand? We just saw all of open interest go off in this Lowe's. Okay. So now fast forward 6 months from now, right? And we see multiple sweeps and lows over the next 6 months, right? And we're talking about rolling and all that. You look back and you're going to remember last week when you saw that first real bet in Lowe's. That's how it starts, right? That's how it started with in energy, right? In these names, the SUs and ARs of the world, right? AR caught the first real sweep, and they opened up the top positions in open interest back here, right? Now, you see nice looking size sweeps in AR constantly. But the first time it caught action, right? Where was it? Back here. And I'm not saying they all pan out like this, but you can see the edge you have knowing, where the positions stand. Like you know the action there. It's not like Uber catches $1 million sweep. All right, it's nice size, but think about all the Uber sweeps we saw post-COVID. You know what I mean? Think about all that action. If you can remember all that action that went into a name like an Uber or an AMD or any of those names, Tesla. Right? How can you make heads or tails out of any flow that comes into these names now? You can't. You can't. And they don't have to be under the radar, like lower liquidity names. They will probably start a little less liquid because they don't have as much activity. But like I said, Tesla once upon a time didn't catch nowhere near the action it catches now. We catch an opening sweep once a month, if that. You just had a better handle on the order flow. You knew you had some conviction of what it was. Like now I have no idea what's going on in those names, how people are positioning. No idea. In the morning, it could look bullish. By the afternoon, it could look the most bearish it looked in 6 months. Just like that. That's the problem. But again, you trade them at certain spots. They're active. The liquidity obviously is a good thing. It's a lot easier when names are liquid than when they're not liquid, especially day trading. So they have their use. But in this type of environment for swing trading purposes, overnight exposure, you can't make money in these things. Awful. A couple of decent looking sweeps. You can't. So we should see more names. We're going to see more, the list expand. Like right now, like you see the names that are catching action, you may not like any of them. That's totally normal. But if things go the way they're supposed to go, you're going to see that list of names continue to expand little by little. And you'll have a choice, you'll find things you like. But we'll see, right? Play day by day, week by week, and we'll see what happens. All right, ladies and gents. Anybody else? Anything? I know Gamma Gang still. Anybody was looking for anything that I didn't talk about or share that you guys want me to post, or we're good? rest up. We got a big week. Tomorrow we got quiet, nothing going on. Tuesday CPI, right? Is Tuesday's the CPI? I think, yeah, Tuesday, right? Tuesday, then Wednesday, yeah, I'll post it tonight. So I think it's Tuesday. I'm almost positive. I just posted the thing here. Let me see. Yep, Tuesday, 8:30 CPI, and then Wednesday, the Fed, and then you got some stuff after the Fed, but we'll cross that bridge when we come to it. All right, so tomorrow's kind of a chill day. We shouldn't see too much. Maybe we got a little weakness and we can play a squeeze because I don't think they're going to let things go too crazy here before. Yeah, massive OPEX this week. So you got a lot of stuff going on, a lot of stuff. All right, but coming out of the Fed, that's where we got to keep our eyeballs open, see how things shake out. Yeah, we shouldn't concern ourselves too much with this week as far as opportunities and trading. You know, we want to see how things shake out going into the end of the week. Yeah, quarter witching. Big expiration too, end of the year. Yep. All right, get some rest. I'll see most of you mañana. The rest of you have a good night. Good luck this week. Get ready for some action. Have a good night, everybody.